Hey everyone, Rosario here. I am excited to be joining you today. I went live earlier, recorded an entire segment exactly on this topic, and it turns out the microphone wasn't working, so I was talking to no one. So that's 30 minutes of recording and planning down the drain. Let's try this again. I'm excited to be here. I am an entrepreneur who has an MBA, and I'm married. I have a dog and a cat, and I live in Vancouver, Canada. And I'm really excited about electric vehicles, autonomous technology, finance, investing, and the title of this video is dollars in investments. That's what I have in my portfolio right now, and I want to talk to you today about what is in my stock portfolio, what am I investing in, what are my plans for 2021, and where do I think I'm gonna be able to grow wealth, and how I'm gonna invest in the future in order to build my wealth and to grow the prosperity of my family. I want to let you know what my underlying goals are, what my reasons are for being here. I've been meaning to start a YouTube channel for a long time now. I've been super excited about it. I already have a couple of videos up there, so go check them out. If you're interested in this type of content, please like, subscribe, click the notification icon to be notified when I release new content, and comment down below. I'm interested to hear what you all have to say, what you think about what I'm saying, and if you're interested in this type of content. So without further ado, let's get started. Today I'm going to go over my $1,000 investment portfolio, and let's get started by pulling it up over here. Let's see if this works. There we go. Okay. So here's my Wealthica dashboard. It shows 131,000. I know that's a little bit less than 150,000, but I have over $20,000 in other assets and other investments that are not yet imported into Wealthica. So let's go through these, and then I'll talk about the other ones in a little bit. So don't worry, this isn't just clickbait. This is my actual portfolio. And I've actually grown this pretty much exclusively over 2020. Prior to 2020, I'd invested all my earnings, all my savings from my work as a project manager and as an electrical engineer into my business. My business is called Inorbis. We do city-to-city travel in electric vehicles. So that's why I love Tesla. I love autonomous vehicles. I'm a huge Tesla bull. And as you'll see, it makes up a fairly large chunk of my portfolio. And without further ado, let's get into my overall portfolio. Is 101,000 here. That's split up a few different accounts. Let's jump in my whole. So you'll see the single largest holding in my portfolio is a company called EXRO. And EXRO is a small electric motor company. They have some really interesting patents and incredible technology, and I could pitch this company for days. I do have to put a disclaimer. This is a company that was founded by my father-in-law. He no longer works for the company, but he has recently retired, and he is responsible for the majority of the patents and the technology that EXRO has. We were gifted some shares for our wedding present, my wife and I invested some of my own money into this business because I believe it has really strong growth potential over the next year or more. So a large percentage of our investments are tied up in EXRO right now. You'll see here, right now it's worth $55,760. We invested about $36,000, so we're up almost 55% on those investments. So next we've got this Wealthsimple Developed Markets ETF, and this is actually in the Wealthsimple, not in the Wealthsimple trade, but in the Wealthsimple investing platform. So it's basically the robo-advisor. So Wealthsimple is a platform that allows you to either trade yourself with the Wealthsimple trade platform. That's their zero commission trading platform, and then Wealthsimple Invest is kind of an automated, here, give us your money, we'll invest it into a portfolio that works for you. I've got it invested into a portfolio that is focused on renewable and sustainable energy development, and that makes up a large chunk of that portfolio company in there as well. We've got a federal bond that's down about 4.5% year on year for stability. I watched a video by Kathy Wood earlier today who said that there was some potential in the bond market because interest rates have been rising recently. I am going to have to do a little bit more research into that because as far as I know, bonds have been massively underperforming, and there would have to be some shift in why I would put money into bonds, in the bond market right now. Let's talk about Tesla. Excellent. Okay, Tesla is right now the 5th largest holding in my portfolio. $3,300. That's not huge. It's only 3 shares of Tesla, but as you know, Tesla has been growing at a really, really good pace lately, and I'm super excited about the company. They're valued really high right now. I'm not going to pull punches here when I say I think that right now they're valued at about 1,400 times price to earnings, and we need to do some valuation. We need to do some discounted cash flows to understand if they are worth investing in right now with their share price sitting at, what's it at right now? It's got to be around $850 per share as of January 11th. So the way that valuation is derived is it's basically what the entire market, so everyone who's investing thinks is the sum of the future potential earnings of that business. So by definition, a stock's value is, or the enterprise value of a company is the sum of all future free cash flows out to infinity. And if you take the enterprise value, you subtract out the debt, you get the equity, then you divide that by the number of shares, and that gives you your share price. So basically, what the share price is telling you is this is what we think the company is going to make from now until infinity, discounted out at whatever discount rate you think that company needs to have based on its industry and based on the market in general. So because Tesla's earnings are low now does not necessarily mean that they are overvalued. It just means that the market predicts that they're going to have massive, massive growth coming up over the next several years. And if they do sell millions and millions of cars and they do overtake the EV market, which I think is a very strong possibility, I think Tesla's valuation could be very reflective of what the business is actually going to be worth in the coming year. And, obviously there's some discounting because of risk, but because of where Tesla is right now, they're strong in their cash position, they're building factories, they're selling cars, people are excited about the company. I think they have a lot of room for growth, and even if the stock doesn't perform well in the short term, it's a long-term buy and definitely 100% a hold for me, but it's still a buy. Anything below 800, I'm going to keep buying. If Tesla falls, I'll buy more. I believe in the company right now. We're going to talk about that more. We're going to do a discounted cash flow to see if what I'm saying is complete horseshit, but that's my thought. So let's keep talking. Tattooed Chef. So this is one I got from Meet Kevin. My wife is a pescatarian, meaning she does not eat meat. She'll eat anything else, but not if it comes from a cow or a pig or a bird. So what that means is that she loves Beyond Burgers. She loves Impossible Burgers. And those companies have shot through the roof. But there is another company called Tattooed Chef, which actually provides all the, fake meat for companies like Walmart. And they're a relative unknown, and I think they have a good product. So I've invested in them. I don't know how long I'm going to be holding on to that. I need to do more analysis to determine what they're worth. Next one is just an S&P 500 ETF. That's VOO. The Vanguard S&P 500 basically tracks the 500 companies in the Standard & Poor's 500 index market, and it tracks that index almost perfectly, and so you can invest in that, and it's like putting your money into the entire S&P 500. NIO, there's an interesting company. NIO is an electric vehicle manufacturer. They are similar to Tesla in that they're making high quality, long range electric vehicles that people actually want to drive. One thing that's different about NIO is that they have a really interesting value proposition, and that is actually you're able to buy their cars, and they just make an SUV right now, but they just recently announced a car. You're able to buy their cars without the battery and actually rent the battery from them. So that lowers the initial buy-in price, and it actually allows them to implement a battery swapping strategy, which is something that Tesla explored a few years ago. They found that there wasn't a lot of demand for it, but they were looking in North America, and NIO is a Chinese company. So what happens is you deplete your battery, you need a charge. You can actually go to a NIO station, and what happens is a machine actually physically removes the battery from underneath your vehicle, slides it out, slides in a fully charged battery, and pops it into your vehicle in about 5 minutes. So instead of 20 to 30 minutes for recharging, you're in and out in about 5 minutes. I don't know how viable this is long term, how many stations they could possibly have, how long of a line you'll need to be in before you can get your battery swapped, but it is a really interesting concept for sure. So I'm invested there. I think they have a lot of potential for growth. They are one of the only companies that's making mass market long range electric vehicles, which is something that I really like. I like EVs that beat gas cars on every metric. They need to be faster, cheaper. They need to be better interiors. They need to have autonomous driving. They need to have better range. So I expect that the reason that electric vehicles will beat gas cars is because people will look at it and say, why would I buy a gas car? There's literally no reason to buy a gas car. So once EVs beat gas cars in every metric, then it's game over. And I think they're pretty close. For me, the Tesla Model 3 is the car that I drive personally that smashes every other gas car that I've ever owned, every other car that I've owned by a huge margin, and I just absolutely love it, and I think that is what's going to drive people to. So anyway, back to NIO. They're a cool company. They make cool electric cars. They've got some autonomous technology that they're working on with Mobileye, which is a company that pre-worked with Tesla. So I like NIO. I'm bullish on them. I'm going to do a more detailed analysis of them. Let me know if you're interested in learning more about that. Okay, next we've got the Emerging ARC Autonomous Technology ETF. So this is another exchange-traded fund. It tracks a bunch of companies that are in the autonomous technology space. So this is something that I'm really interested in, and I think is going to be a huge factor for growth in the market over the next years. ARK Invest is a company, an investment company that is led by Cathie Wood, and she's a huge Tesla bull. And basically what this ETF tracks is all the companies that are creating amazing technologies, up-and-coming technologies in the space of autonomous vehicles. So that includes companies like Tesla, probably like Google, Waymo, Mobileye. I'm not sure exactly what's in there. I'm going to do a deep dive into that, but Cathie Wood's extraordinarily smart, probably 1,000 times smarter than me. She knows what she's doing. I believe in the future of autonomous vehicles. I think that the potential for, rolling out of bed in the morning, getting into your car, having it drive you 2 hours while you get ready and watch a movie instead of, having to do that all at home, or, go on conference calls, do whatever you need to inside your vehicle instead of, having to do that all at home while you drive. It's going to save people tons of time. It's going to allow you to live anywhere, and it's going to allow you to meet in person, which I think is still something that is lost in this digital space that is not going to go away anytime soon. I think, right now with everyone working, it seems like person-to-person contact may never come back, but I believe that there's something that person-to-person contact has for humans that is not going to go away. And so autonomous technology is going to get us where we need to be. It's going to get us there safer. It's going to get us there more efficiently. It's going to get us there quicker. It's going to reduce the number of cars on the road. And it is just going to be a complete game changer. So I'm heavily bullish on autonomous technology, and I'm going to be putting more. The next one is the Emerging ARC Genomics and Biotech ETF. So I have several friends who are doctors, and my closest friend, Brad, is a genetics a doctor, and his specialization is genetics. So he's kind of showed me what's happening in the space, and there's so much incredible technology that I don't have time to talk about here today, but I'll talk about it in another video, ranging from CRISPR to protein folding and sequencing to these technologies that are going to be able to cure disease and extend human life and improve the quality of life for people around the world. So I'm so excited about that. So yeah, another one from ARK, another ETF, very well performing to date, and I think they're going to do even better. I'm going to be getting more deeply into those in future videos, and sure that I'm going to be investing in those spaces more in the coming. Next we have this iShare Gold Bullions. So I think that gold, there's a lot of people who love gold and a lot of people who hate gold. I think gold is... It's better than fiat currency for holding value, which is what we have. We have a currency that is actually targeted to inflate about 2% every year, which means that it loses 2% of its value. Gold tends to hold its value. It's not a great investment in terms of going up over time, but at least it holds its value over time and it can perform well. So it acts as a deep hedge. I will take this opportunity to talk about my Bitcoin holdings. I also have some about $3,000 in Bitcoin, and I think that's about 0.1, not even 0.1 Bitcoin at this point. And I did have 2 full Bitcoins, but I lost the private key a number of years ago. I didn't lose it. It was actually on a piece of receipt paper. The receipt paper faded. I was unable to read the private key. I tried absolutely everything to get it back, from UV lights to heating up the paper to creating a program to try and guess the missing digits, and I just couldn't get it back. So, $80,000 down the drain, not pretty. Long story short, save your private keys. Don't lose them. If you do, your money's gone. All right, let's move on. VTI, that's the Vanguard Total Stock Market Index. Well, let's back up for a second. Bitcoin. Very bullish on Bitcoin. I think cryptocurrency is an exceptional technology. I do have some concerns about the cryptography behind it that enables it being broken by quantum computing in the future, but that is probably a long way off at this point. I think Bitcoin has the potential to revolutionize trade. I think it's very small in terms of market cap. It's like 700 billion right now, which is less than Tesla. I think it could become basically the world's reserve currency, essentially. Like, people transact in Bitcoin over the next 10, 20 years. So maybe Bitcoin goes up. Right now it's like 42,000 Canadian for a Bitcoin. I think in 10 years maybe it's 400,000. Who knows, maybe it's 4 million a Bitcoin. I think it's something like gold, where there's a capped quantity. It's highly desired and it can be easily traded and divided. So I think for the future, for a store of value, Bitcoin is really good. It's extraordinarily volatile, so it is highly risky, but I'm a big bull on Bitcoin. I've tried to understand the technology behind it, and I'll dive into that in other videos. But yeah, definitely love Bitcoin and going to be investing in that more. Total stock market index. In investing, if you don't have insider information, which you're not supposed to, for trading, and I don't, diversification is key. What you're doing is you're getting rid of the risk that is not priced into a stock's share price, and that's the risk, the idiosyncratic risk that's related to that stock. So any risk premium you go for, if you do the math, it turns out that you're always going to be better off in the long run if you invest the most diversified portfolio possible. So the portfolio with the least amount of correlation, you're going to do better over the long run at any given level of risk. So I have some in the total market, try to diversify. Also do some international ETFs. But what I want to say about this is, the math says that diversification is key. So really, what's the advice to do if you're going to invest? Put your money in a total market ETF, diversify it as much as possible. Get into different industries, get into different asset classes, and that's the way you'll reduce your risk and maximize your profit potential or your return potential for any given level of risk. And I'd love to talk about that more. I've questioned it myself. Like, people get rich all the time investing in individual stocks that they know really well. How many people do you know that have gotten rich just investing in the total market? It takes longer, but mathematically it works out. So we'll talk about it more. We'll debate and we'll decide on a path forward. But for now, I definitely keep some of my holdings in diversified ETFs. Let's see, Microvision. Let's talk about Microvision later. They make LiDAR, which is a technology for similar to radar but uses lasers. I believe it's laser interferometry detecting and ranging, and what it allows you to do is create a map in 3D of everything around you. A lot of autonomous tech companies use LiDAR for their computer systems, for their autonomous vehicles to map out the world around them. Tesla famously does not, but they are using microvision in some of their cars to try and emulate LiDAR, the predictions of LiDAR. So that's pretty cool. We'll talk about that later. Apple. Stable company, great products. I own an iPhone, I work on a Mac. The reasons for that is that the products last for longer, they maintain their resale value, so I can sell them and get the new one and not lose a huge amount of money. And I find they're reliable. Compared to Windows machines, I've had Macs that last for 5 or 10 years. And doing kind of the valuation and the opportunity cost, I like owning them. I think they're a good product. They're not as innovative as they used to be. We'll talk a bit about the Apple car in future episodes, but they are, I think, a good bread and butter investment at the this is another Wealthsimple Invest, gold for Wealthsimple Invest, same sort of thing. Square, if I could, I'd invest in Stripe, but they're a private company. We use them in Orbis for payment processing, but Square is a similar company. I'm sure a lot of you have heard of them. They have large potential for growth right now, and it might be overvalued right now, so we'll do an analysis on that. We've got the genomics and biotech ETF. This is Canadian dollars instead of US dollars. This one, emerging markets, so that's more diversification into emerging markets, developing countries. Actually, but that's part of the Wealthsimple Invest. So basically, you just pick, okay, I want sustainable company to go out and pick up. I don't know if I like that long term because they charge every year, but it's been performing fairly well, and we'll see how that keeps. Etsy, cool online company, much smaller than Amazon, more like individual resellers. I think Etsy is cool. It's an interesting buy. Learned about it on Meet Kevin. Meet Kevin, if you want to do a collaboration, hit me up. I would love to speak with you about some of your investments. And my business in Orbis would like to sponsor your show. Let me know you're watching. Fidelity, high dividend ETF. I found out today, actually, and this might help you out, that with Wealthsimple, you actually cannot automatically reinvest your dividends, and there are fees every time. So I'm going to get out of this. I don't want dividends in Wealthsimple because it doesn't work, especially for US dollar dividend companies, because you have to pay the withholding tax right away. I'm going to put my dividend yield companies into Questrade, because you can actually keep money in US dollars and set it to automatically invest dividends. So yeah, if you're looking for high dividend yield companies, I would not use Wealthsimple. You're going to be taking a hit every time company. Some more ones from TSX. Toronto, don't know what this ETF is. And then these last three here are plays into metals. So Tesla on their battery day announced that they would need a lot of nickel and a lot of lithium and a lot of other metals for their batteries. They're planning on making millions and millions of cars, energy storage systems, and nickel and metal mining companies are gonna hopefully be able to take advantage of the huge spike in demand for electric vehicles from Tesla and other auto manufacturers. So this is kind of a long shot bet on some of these Canadian mining companies that one of them will get a contract with. So yeah, that's my portfolio. I also have an investment in a private company that I was able to do over the last few months that is actually in the marijuana industry. I'm bullish on that because of Biden administration in the U.S. Legalization of recreational drugs is a possibility, especially marijuana, in the coming years. So bullish on that industry. I'm excited. 2021, there is a lot of opportunity. There always is. Anyone who is a doomer, if the world ends, the world ends, but I'm going to try to take advantage of, my knowledge of the information that's out there, what I've learned to try and grow my wealth and try and help my family be more free, enable us to travel, live where we want, and, live our lives with less worry and happiness. I've always said that You know, I'm not afraid to admit that I want to be happy. That's my goal every single day, is to be happy, to work on myself, to better myself, and to live a meaningful life. With that, that's my portfolio. I hope you guys enjoyed watching. If you did, please like this video, leave a comment, and subscribe to the channel. I'm really excited to be putting out more videos. I'm going to try to put up a new video every single day, so please stay tuned, and we'll talk to you guys very soon.